Guys, welcome you all to today's video. Thank you so much for all your results based on the $500 trading tips trading strategy that we did yesterday night. I'm really happy that you guys really took advantage of the market. You followed the instructions during the analysis period, and of course you were able to use it to milk the market for yourself. Okay, I'm really happy about this. Okay, we will continue from where we stopped yesterday, which is the spikes trading strategy for trading boom and crash. Okay, we had the intro yesterday, and so many people have started taking advantage of the information given out during the intro, so we will continue from there today. But before we go fully into it, in case you are joining us for the first time, I welcome you all to Qora Digital Cash. This is a platform which I used to share with you my ideas on how you can make some cool cash for yourself online, most especially within the forex niche. All you need to do is just to take some time to browse through the channel, watch my training videos, practice and perfect your trading skill first on your demo account before trying them out on your real account. And if you love my videos, can you give me a thumbs up and share with families and friends? And if you are yet to subscribe to this channel, can you do so right away so that you can be notified whenever I upload a training video like this? So quickly, let's go straight into what we have right here, starting right away. Okay guys, like I said, we will be checking out how we can trade boom and crash using the spikes trading strategy. Spikes trading strategy is like you taking the bull by the horn. Okay, because spikes has always been the major factor while most of us lose our money whenever we are trading these assets. Okay, but this time around we want to see how we can take care of the spikes. Okay, how we can trade the asset using the spikes. Like I said, it all depends on the trend. Okay, you don't trade it when the spikes is not suitable to trade at that particular point. You don't trade it. For instance, this is boom 5, I mean this is boom 1000. Can you imagine trading spikes under this this trend, under this downtrend? Okay, it's going to make you lose your money. Okay, it's going to make you lose your money. You can imagine you hoping that it's going to spike around here, you hoping that it's going to spike around there, and you now place your order around there. You can see it kept on going down and down and down. Okay, of course it spiked up here, but it didn't get to your entry point, spiked up again and again and again, and didn't get to your entry point, and it kept on going down and down and down. Okay, you can imagine this will make you lose your money. Or probably you decided, because you noticed that it has spiked once and it has spiked, it's about to spike a second time, you decided to place your order around here, and of course check it out, spiked and spiked, and you felt that it will still spike more. It went below it again and it kept on going down and down and down. Check it out, it has got into this support zone. If you are not having a strong capital, and of course you are not having you are not using the right lot size for it, then definitely you would have lose all, I mean your money will have been wiped out right from this platform. Just trying to trade the spikes. So you need to have the right knowledge in order to trade these spikes, in order to trade this as an asset using the spikes trading strategy. So the first thing you should take care of is the trend. You should know the right trend to trade the spikes. Under boom, the right trend to trade the spikes is when the market is going on uptrend, or when it is already on uptrend. That is when you can trade the spikes. You can imagine you placing your order around here to trade spikes. Check out the series of spikes that happened around here. It finished at the top right here at the resistance zone right here. That would have given you a lot of profit. This is 5-minute time frame. You can imagine how much profit you would have made with this. Okay, that is how beautiful you knowing the right way to trade the spikes is. Okay, so once you know the right way to trade it, then you will be able to milk the market successfully using this strategy. So quickly, let's see how we can go about it. In my last video on this, okay, the intro part of this training, I told you that whenever you are trading spikes with boom, okay, the market must be on uptrend and it must start the spikes usually happen around the support zone. If you should check it out, this is the support zone. So all the support zones within the uptrend region are very, very important. Okay, while for crash, okay, the market must be on downtrend, and the spikes usually happen around the resistance zone from crash, because it usually go down. Okay, so that is it. So that is why you need to take note of all this. So this is a major support zone, so you can as well place your order around there, and once it spiked up, you can close your trade if you want, and you can leave it open. And of course, it kept on spiking and spiking. Okay, let me bring in another horizontal line. Okay, and it kept on spiking. This is 5-minute time frame. I will always advise you to use 5-minute time frame, because it will help you to leverage on the time frame also. Okay, so you can see you would have been in the market, spiked up again till it got to this, it came down a bit, spiked up again. You can see it has given you more opportunity. The reason why you are able to stay this long in the market is because the market, the trend of the market is in favor of the strategy or the trade the order you are trading, which is the spike trading. Okay, the market is on uptrend and you are buying, you are following the buy signal at this particular point. Okay, so it came down again, then it spiked up and up again. You can as well close your profits around, close your order around there in profit, because you would have noticed that it came down, spiked up, came down again, and it didn't go beyond this resistance zone. So you will notice that the market is ranging at that particular point, and only two things can happen when the market is ranging. It is either there is a breakout above it or a breakout below it. Okay, so you can say, okay, in order not to risk your profits totally, then it is better you close your trade at this point whenever it gets to the resistance zone again. So once it gets there, instead of you waiting for it to break out from there, you can close your trade and let the profit go back to your balance. Okay, then wait for when the breakouts will happen, and of course the breakout happened around there, and since it is still far away from the resistance zone, then you can still come in and trade, and you can see how beautiful it is. Okay, you would have been trading the spikes right from here, and it will keep on going up and up. You can see the first spike happened, second, and of course it kept on going up, came down, and it went up again. Okay, you can see this will even give you more profit and more confidence within the market. Remember, you have closed you have closed the first order in profit, and this is the second order, and it has really gone high as this. Okay, that gives you more confidence within the markets. Where are you supposed to close it? Once it is approaching the resistance zone, which is going to be a major resistance zone this time around, then you should close it, because the next thing that should happen around there is either a pullback or a total reversal in price action. That is if it does not break out from that resistance zone. That is very, very important. But in order for you to secure your profit, it is better you close it just before it gets to the resistance zone. So you can close it at this point and wait for the next thing that will happen after that. Okay, you can see that the next thing that happened is the total reversal in price action. That will have saved you a lot of stress, and it will have saved a lot of profit for you. So your profit will just go straight into your balance right away. So guys, this is how you can trade spikes using this strategy, and you're going to enjoy every bit of it, and I'm going to show you more on how to go about it in my next video. So you should go back to your chart. I wanted to have this set up in your chart. Remember, your setup should help you to analyze your assets quickly. You should be able to identify the trend. You should be able to identify your support and resistance zone. You should be able to identify your entry point and your exit point. Okay, and that is what this indicator is doing for us. So if you are not having this indicator, it's not compulsory you have this. If you have the one that can do the job for you, you can use that. But if whatever you are having will not give you the same result as this, then you should have this indicator. It will help you to analyze the market and trade in a more unique way. Okay, so I want you to go back to your chart and have your setup ready. Take your chart to 5-minute time frame, try to identify the trend and trade the right trend that supports the spikes. Okay, so I will be stopping right here. Remember, this is coming to you courtesy Qora Digital Cash. And if you have any question at all, feel free to contact me. My contact details are in the description box below this video. And if you are yet to subscribe to this channel, can you do so right away so that you can be notified whenever I upload a training video like this. So guys, watch out for my next video. Until then, God bless you.